Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 13th of November 2022. Now firstly, I wish to express my apologies for there being no video last week. The reason being was that I was on board a ship which we believed would have adequate internet access to upload YouTube videos. Unfortunately, it did not. And so whilst I was planning on doing an update, I was technically unable to do so. So please accept my apologies for that. Meanwhile, these past 2 weeks have seen quite a run for gold and silver prices, and especially last week. A number of reasons for this, but the prime one being the fall in the US dollar because, well, let's take a look. Okay, before we look at last week's economic data, it's important because we were away last weekend to look at the previous week's data and what that actually revealed. And we can see that the Chicago PMI was lower than forecast. The manufacturing index was marginally above forecast and the previous month. The ISM manufacturing index similarly. However, what is of interest, particularly to us, was in fact the services index was lower as far as the ISM index was concerned, but the big one was in fact the non-farm payrolls. Because although the non-farm payrolls report showed a higher number of jobs, 261,000 compared to expectations of 205, that figure was lower than the previous month, but the key thing here is the unemployment rate, which was actually higher at 3.7%, with wages rising, thereby suggesting some potential pressure on the economy. Now, if we look at last week's figures, this is then fed through. In what way, you may ask? Well, let's take a look. Now, the most important data on the previous week was in fact the FOMC's announcement on interest rates. And whilst the Fed funds rate rose by 0.75%, in other words 75 basis points from 3.75 to 4, the statement afterwards and the coverage thereafter suggested that perhaps the Fed was going to be slightly less hawkish moving forward. Perhaps they had knowledge of the unemployment rate rising on the Friday. Now, if we take a look at last week's data, we can see that consumer credit for September was down compared to expectations and down from the previous month. We, of course, had the election day on the Tuesday, and on Wednesday wholesale inventories, but what captured our eye, but unfortunately we were unable to report on it because we were on a ship without appropriate internet to upload, was the consumer price index. And it is clear here that these figures had the most impact, particularly on the dollar and precious metal prices. Why? Because the CPI monthly change came in at 0.4% and there were expectations of 0.6%, but the core CPI came in at 0.3% for October against expectations of 0.5% and against the previous month's figures of 0.6%, thereby suggesting, and it's only suggesting, it's 1 month's figures, that maybe the peak in inflation has now been reached. And we now have a CPI 12-month change of 7.7% compared with 8.2% the previous month, and a core CPI figure of 6.3% compared with 6.6%. Now that is extremely extremely encouraging. And we can look at the gold price and you can see what happened. Because on that Thursday, the gold price jumped from $1,700 basically to almost $1,771 by the close on the Friday. But on the Thursday, there was an immediate jump within what? Have a look at this, maybe an hour to 2 hours maximum of $50. Which for gold is quite a significant leap in such a short period of time. Now, what have we got coming this following week? Well, we have the Producer Price Index on Tuesday and the Empire State Manufacturing Index. The one of interest really is Wednesday's retail sales figures. The reason being is that if these figures are lower than expectations and reasonably lower, then that may support the Fed's apparent view that whilst they still need to be strict on inflation, they need not necessarily for December be as strict as a 0.75% interest rate rise, and they might get away with a 0.25% or a 0.5% rise. So we'll be watching out for that one, because that will have a bearing in our view. Of course, we have the initial jobless claims, and then on Friday, existing home sales and leading economic indicators. So the important one for us, we're looking at the Empire State Manufacturing Index, but the important one will be the retail sales figures, if they vary considerably from expectations. Now, clearly, last week's dollar fall, which was the largest weekly drop in 2022, had the most significant impact on gold prices, and similarly silver too. Futures contracts for gold's December contracts showed gains of almost 5.5% at one point, and analysts point out that 78% of gold's rise is directly attributable to dollar weakness, and the remaining nearly 22% to market traders bidding the prices higher. Now, from a technical point of view, gold reached both the 50-week EMA and is hovering around the 200-day EMA. Gold needs to break through this, and if that is actually achieved, then 1800 with eventually 1850 within sight, should the bulls then decide to re-enter the market, will be achieved. If, however, we see gold fall back below 1750 and not sustain this recent rally, then whilst 1700 may hold this week, should we get down to that level, and we're not saying that we definitely will, but should we get down to that level, we will soon be back into the mid to late 1600s again. That said, all things being equal, many traders are viewing gold as being more positive than negative over the next week, and especially if the retail sales figures are disappointing, which therefore suggests the Fed will not be quite so hawkish. The crypto market imploding because the crypto exchange FTX filing for bankruptcy may direct existing and potential investors for the crypto market to reconsider their portfolio and decisions more in favor of precious metals, because as we've mentioned many times before, a reasonable amount of money that perhaps could have gone into precious metals were finding their way into crypto over the past 2 years. Silver, like gold, had an encouraging week, and even 2 weeks really, with that key resistance level of $22, which we've mentioned many times previously, being the crucial level for silver to break through and hold before we can expect to see silver start rising back up to the mid-$20 again. Whilst we factor this as a possibility, we cannot help but think that the rally in precious metals, and especially silver short term, may be just a little overdone. If the economy is actually weakening, then we shall see a decrease in the physical demand for silver, or at least the industrial demand for it. And if the economy is strengthening, then the Fed will not be timid on interest rates moving forward, which will act as a severe headwind for precious metals. Now, we're of the opinion that this next week or two may indeed be a little erratic. There is the possibility that the Fed may increase rates by only 0.5% in December rather than 0.75%, which ironically may still please markets, but inflation even running at 7.7% shouldn't please any market. and it's nothing really to celebrate, and is extremely wide of the FOMC target of 2%. Now that said, though, we may see some follow-through on Monday, with the determining factor for next week, in our view, being retail sales on Wednesday. So in what could be a short-term turbulent precious metal and US dollar value market, we envisage that gold will broadly trade next week between 1725 and 1825, but more likely sort of in the middle of that sort of range, with 1700 to 1850 as outliers, though we will be surprised if it does go as high as 1850, quite frankly. And silver trading between 21 and 2250, and 2025 and 23 as outliers. Again, we expect the brunt of the trade to be in the mid 21 to early $22 level, but of course silver has a larger sort of discrepancy between highs and lows, which is why we say 21 to 22.50 and 2025 to $23 as outliers. Now, what do you think? Please share your thoughts. Let us know if you agree or disagree with us. Yes, precious metals have risen these past couple of weeks. We were expecting perhaps less of a rise, in fairness, though we did point out there could be a rise, and we were a little more bearish than has actually happened. However, we also think that this rally, whilst it could continue, is rapidly reaching its extent unless something significant happens, either geopolitically or financially. And I would like to thank you for listening. If you haven't done so, do subscribe to the channel. We will be changing its name soon, and we're taking on board the recommended names that people have put forward. And before we actually go ahead with a full-blown change, we'll make some suggestions to you. And please press that bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.